Thanks for joining us for this month's market update. I'm here today with Casey Lowe, Senior Consultant at Frontier, member of their capital markets and asset allocation team. Hi there, Casey.
Hi, Wayne.
How about let's start overseas today and specifically looking at a bit of a shift in the regulatory environment in China. Just talk to us about the kind of impact that we could see flow through there for investors.
So global equities has continued to do well in recent months, but emerging markets has underperformed. And part of the reason for that is because of these regulatory crackdowns in China, as you say. So as a result, Chinese stocks has not done as well. That has flowed through the emerging markets underperformance. And to highlight a few of these regulatory shifts is one of it is DD, which is the Uber of China, which recently listed on the New York Stock Exchange. And what we're seeing there is that regulators have stepped in and stopped the app from taking new users, and they've also banned the app from app stores in China. And all of this is driven by data privacy concerns there. We've also seen Meituan, which is a delivery platform company not too dissimilar to, for example, Uber Eats. Regulators have cracked down there and forced them to pay at least minimum wage to their riders. And most recently, we've seen private education firms being banned from making a profit, and also not take foreign capital investments as well. So far, the official reasoning provided by Chinese regulators is that all of these regulations are to address social issues. So in the case of the private education firms, this is meant to address inequality of access to education, but also to address the rising costs of raising children in China, and also to address the low fertility rate in China as well. But really, overall, regulatory risk in China is not new. We've seen these regulatory crackdowns over recent years, particularly in terms of managing financial risk. We've seen banks impacted by that over the past few years. So it's not new, but it's still one that investors should be mindful of.
Sure. Now let's return back home, and the majority of the country, certainly many people are currently living through a lockdown situation here in Australia. What are the possible ramifications and implications coming out of those lockdowns for the markets more broadly and for investors specifically, Casey?
So what we've seen is the spread of the COVID-19 Delta variant in Australia, which is a much more contagious variant. Plus, when you combine that with the current low vaccination rate, we've seen a number of states go back into lockdown. The key ones to focus on from an economic perspective is the lockdowns in New South Wales and Victoria, just because the two states combined contribute more than 50% to Australia's economy. So what we've seen there is that if these lockdowns do drag on, they could have a potential impact on economic activity, which will flow through to corporate earnings and then to stock markets. But what we've seen is the Reserve Bank of Australia haven't actually changed their policies at the most recent meetings. And a few reasons cited for this is that, first of all, the experience so far is that activity and consumption actually bounces back quite quickly once these virus outbreaks are contained. And second of all, we've seen a step back up in the fiscal support policies by both federal and state governments. So that will also help consumption activity bounce back once these lockdowns are lifted, and help offset some of the impact on households and businesses. So what we're looking at right now is the weekly jobs data released by the Australian Bureau of Statistics. So it's a higher frequency data set that allows us to keep track of what's happening. And you'll see in that data that not just consumption and activity, but the job market has tended to bounce back pretty sharply post each lockdown. And you'll see that the jobs market has actually been impacted most recently because of the recent lockdowns as well. But at this stage, we think that the policy offset by the state and federal government will do well to help. And also, as we said earlier, the experience is that activity does bounce back pretty well. So it's something to keep monitoring, but at this stage, it looks okay.
Great. Well, KC, lots of data, both domestically and abroad, for you to analyse and stay across. Thanks for sharing your insights with us today. And thanks to you for watching this month's Market Update.